Good morning. It's time for a weekly recap. What I did wrong, what I did right. Anything provided in these videos is for entertainment purposes only. I'm a random guy on YouTube talking about trading. I am not a financial advisor, and nothing I say or do in my videos should be construed to be financial advice of any kind. The majority of traders lose money trading. Trading is a very risky thing to do, and you are very likely to lose money whether you listen to my videos or not. Alright, so let's talk about how the week went. Made 436 on this Top Step account. This is still a combine, so this is not real money. This is me trying to get to a total of 3,000, which is going to take longer than I would like. I may lever up a little bit more, especially as I get closer to the rebank, which is on the 25th. So the way the Top Step works is, right now anyway, is that you subscribe. I've got a 50K combine, which is an evaluation account, and you subscribe. It's $50 a month right now to have that option. You have to make 3,000 on that account, so you have to get it to 53,000 without hitting the trailing maximum loss limit. So you'll notice the maximum loss limit it was at 48,000, now it's at 49,140. So you can never lose more than 2,000 before it pops the account. If it does pop the account, you either have to wait until your next subscription payment, which in my case would be on the 25th, or you can early buy. You can spend another $50 to reset it. However, Top Step now gives you a reset for free once you get to the subscription point. So, given that I want to get to the real money stage of this soon, what I may do is start using a little bit more leverage, not a lot. I may move it up from 1 to 3 micros. Sometimes, and also I may wait for. I may lever up a little bit more on bigger moves, but I just got to be careful with that. As I was talking about in the past, I've been doing some sort of revenge trading and a little bit of martingale, and it's a terrible idea. So I stopped doing that. I was able to stop anyway. And now what I'm doing the last 2 days is I'm only basically levering up on winning trades. And I'm still trying to work out what the best process for that might be. I think maybe actually using a tick, like if I'm going long, I'm waiting for a strong down tick and then checking the chart to see if it hasn't broken the long premise, then maybe adding on strong down ticks. I'm not really sure what to do with that, whether I want to add on it breaking to new highs or if I want to add on strong down ticks. I may try both and play with that. But yeah, so as you noticed though, I did have a fully green week last week, which is, I suppose that's nice. Although you can see last week went better. My trading stats are terrible. One of the reasons that they are terrible is that I manage my trades in real time. I don't do set and forget stuff, where people have a stop loss or a take profit and they walk away and they force it. They say, oh, it has to go to this or that. I kind of watch price, and I'm trying to improve my ability to tell when something is going to go against me and actually get out of it early. So my win percentage and my average profit to loss doesn't look very good because I might occasionally take a full stop loss, but I have a lot of small losses, and so it sort of averages out to look like I shouldn't be making money, but I am. So if you look at the actual stats here, so I put it up for last week. If you look at the actual stats, I'm barely hitting 57% on the win rate, but my average win, average loss, there must have been a bigger loss in there somewhere on one of those days. these numbers don't, these aren't really indicative. So we'll have to see what next week looks like. Um, it's like I shouldn't be making a profit, but I am. So I got to work on, again, no revenge trading next week. Only levering up on winning trades or things that just look like much better setups, maybe something like that. And trying to keep it consistent. So we'll see how that goes. So yeah, hidden in the first 3 days of this week were some wild swings. It was just dumb, and I'm putting a stop to that. So let's talk about Thursday and Friday. So Thursday, see if I pull it up here. Thursday was a trend day. There is an indicator that you can use to tell whether something is going to be a day like this in advance, and it all day basically. Trying to see where you would get it. So it's in Thinkorswim. I think it's Trade Brigade, and it's something. In fact, let me shoot. I gotta get my password for this. Hold on a second. I gotta log into Thinkorswim to show you this. And then I'll move it onto the screen. A second here. Okay, so yeah, so that's fine. Let me move this on and you can take a look at it. So this is an interesting indicator. So it's this right here. So I've got a custom setup here with a bunch of things: VIX, volume, SPX volume line, advanced decline, trend, tick, and the put call ratio. So I've been playing with this. This is sort of trying to read market sentiment. There's a couple of other things on here to notice. I've got MAGS. MAGS is a like a top 7. Is it 7? I don't know, but it's anyway top companies conglomeration. So this is basically MAGS is an indicator of if people are throwing money into like the big tech names. VTI is an overall market indicator. It's like the Vanguard index. It's like an overall indicator. So you can tell whether there are some big names leading a move and whether the rest of the market's lagging behind a little bit. These other two are compound quotes. XLK, XLC, XLY is the offensive sectors. XLU, XLV, XLP are the defensive sectors. So the sectors in the market are either offensive or defensive, and on a given day, again, this is sort of a way to try to tell if people are feeling bullish or feeling bearish. That's really all I'm looking for. It's like what what side of the fence are we on? As you can see now, this is the important thing right here. These four like volume ratios. These I cannot go back in time and show you what these look like on a given day. These are like real-time things that are stuck at whatever the close was. So you can see what this is right here. This is NYSE volume ratio, Nasdaq, Russell, S&P 500, and you can see they were mixed. If you go back to the trend day on Thursday, at the very beginning of the day, these were all green and they were all like 3 or 4 to 1, all of them, and they were just stuck like that all day. There was no way that the day was going to be anything but an upward trend day unless like something happened in the market, everybody's mood suddenly changed, like some tweet or something. But so really there's three different things here to look for. There's that sort of they're all green and they're all higher than 1 or 2 or something. They're all like 3 or 4 to 1 and they're all green. That's an uptrend day. You can make money buying on that day no matter when and where you buy. You can just sit on it till the end of the day pretty much. It's ridiculous. That is not going to happen very often, but if you were to say want to beat the market, for example, and this would apply to anything in stocks or anything else, you could pretty much beat the market easily just by waiting for those days. It's a little silly. Now, if you look at this was a mixed day, and if we look at the market from yesterday, this was yesterday's price action. This was definitely a mixed day, and that's one of the reasons why this was so choppy and difficult to trade. There were some spots in here that after the fact looked like obvious uptrends, but when they were actually in play, it didn't look at all like it was that clear of an uptrend. There was some support on the EMA, but it didn't, you weren't really sure if this was going to do something and then just go down. It wasn't great. So yesterday was kind of rough trading wise. Didn't really make any money in here. I tried a few times. I do take a lot of small trades, and sometimes I get out, and sometimes I stay in if it starts going in my direction. But I think basically up until this point where there was this sort of parabolic move, I didn't have anything. I was break even for the day. And I took this short right here. When you look at this is an inside bar and another inside bar, and then a failed breakout to the upside. So I actually took the upside initially, saw that it decided to invalidate itself, and then I immediately shorted and reversed with a little bit more. I think it was 3 micros rather. So I actually took the short right here, and I ended up getting out, I think, in here somewhere. This was kind of a mess. And then the action was just really nasty in here. I'm glad I didn't get caught after the end. I just said that's it. I hit the stop button at that point. So it wasn't an easy day to trade, whereas Thursday was a very, very easy day to trade. Here's Thursday. So the start of the market down in here, I could see that the market was the market internals, the stuff that I just showed you. It was just obviously solid bullish, and there was nothing else to do but buy. So I think on Thursday, I took scalps here and here and here and maybe in here, maybe got a little chopped up in here thinking that it was going to go up and it didn't, getting out. I should have just held it through this whole thing, really. And I think I caught this sort of end thing and got out before this mess, because this is too close to the end of the market, 14.55 there. So I sort of played this as well. So excuse me, this was a much easier day to trade because there's no question. Looking at the market internals, everything was 3 and 4 to 1, green across the board. There's not going to be a reason that, especially as a beginner, that you should ever try to go short in an environment like that. There are a couple spots where you might have gotten short, like here, looking at this sort of failed breakout. You could have scalped this, but again, this is only a couple of points. It's not, I don't know, it's not really worth messing with trying to get short in any of these spots. So it was really just a long only day, and that's something I want to look for, because I don't have a lot of experience, and seeing how obvious the market breadth was and the volume buying and everything else, and seeing that it was just clearly going to be an uptrend only day. I think on days like that in the future, I'm going to just unload on the market and just be like, well, the probability of any long working is much higher today, so therefore I'm going to take a higher position, use more leverage. We'll see how that works. If I get to the point where where I have a funded account, that may be the day where I choose to risk 25% on every trade or something, where I really take the risk on it, because it just I think it pays off in the end, and especially to not scalp, especially to just basically take a buy at the beginning of the market and just sit on it until basically the end. And that's it. I mean, you don't really have to do anything else. I do have a tendency to take lots of trades, so that would be the sort of thing where maybe next time I see the market doing that, I take the trade, switch over to just watching the market internals, and I don't even look at the trade anymore. I just walk away from the whole thing, because taking like 10 micros here and sitting on it would have felt dangerous, but it really wasn't as dangerous as taking it in any other market day. And holding 10 micros or one mini contract, from here at 65.60 up until this range 65.90, that's 30 points, and that's, what is it, $50 a point. I mean, that would have been $1,500 move, and that would have made half of the eval right there. Now, the consistency rule is a problem. They do have consistency rules with these Top Step combines, so they expect you to not have big days like that, and so but you can, you just have to kind of trade a few more days to get beyond that, because maybe you get lucky. I think that's what happens to people, is that when you get these bull markets, you get these sort of uptrend days, like day after day, or a couple of days a week, and so it becomes much easier to make money on the long side. And I don't think people realize that the market has all these moods, and that you can watch it with the internals. So then a day like Friday, where the internals were clearly mixed, you couldn't do a whole lot except expect it to be somewhat range bound and yet maybe trend in some fat. I mean, this dump at the end, I have no idea what happened here. I wasn't really expecting this to go down further than, I don't know, maybe here or something. I was expecting it to be a scalp, and I kind of just looked away from it long enough for it to really start to move down. So I don't know what happened with that. I do believe that there is something about the end of the day that is predictive and repetitive. I'm noticing that in the last couple of weeks that there's always a pop at the end of the day, and now this suddenly has reversed. Although you do see there's a bit of a rebound in here still. So I think there's either a lot of rebalancing happening, or there's like people getting out of their longs maybe here, or that has something to do with mutual fund buying, even though I guess they buy after the close, but I don't know. I think there's something going on there that's something to be aware of. Another thing I'm noticing is at lunchtime, from 11 to 1:30 or 11 to or I don't know, what is it, Eastern, it would be probably 12:30 to 1:30 or something like that, is boring. It doesn't seem to want to move that much, and I don't know, it seems to me like you should just kind of hold with the trend through the whole thing and not make more than one trade and just sit on it. I'll have to look at that again. We'll see what that looks like. So there really wasn't that much movement on this day. If you look at this at the open on Friday, it just kind of the actual range in terms of number of points, it was pretty small. So there wasn't a lot of opportunity in here to make a good deal of money. It just, the moves didn't go on long enough for you to cover the mistakes It just wasn't that great. It would have been nice to catch this whole thing, and I think I caught the first part of this, but hindsight, it's really hard to predict that it's going to do stuff like this. This looks like, in here, it really looks like it's going to start to go down or sideways, and it's unclear. And then, of course, it continues onward, so I don't know. But, yep. So that's how the week went. We'll see, going back to the stats and looking at the overall thing. This is actually somewhat promising. So if I look at the whole this month, yeah. So if I look at the entire thing, this is actually not a bad profit curve, though. It's pretty steady. I didn't really have that many losing days, and they were pretty small. So if you look when I started, this was mixed the first week, and then I've been doing a little bit better. So I do need to make more, but consistency, I think, is also important. So I'm going to work on this. We'll see how it goes, and we'll see how next week goes. I'm probably going to use, because we are getting a little closer to the rebank. I may start to trade with 3 micros in here, and then just see how that goes. And again, I really need to avoid trying to lever up after a lost trade. That's going to be a problem, because I've taken that way too far a couple of times in this account. So but other than that, starting small, adding to a winning trade, and sort of working on that premise, this should be fine. I think my next goal for next week should be to keep it consistent and then try to make more than I did this week. If I can make closer to 800 or 1,000, that would be great. It'd be great if I could finish the whole darn thing, but it's not fast. And I don't know. I'm sort of getting tired of the combine thing. I'm wanting to. I don't want to say yes. I'd like to blow a funded account, but I don't know. I want to get to that funded account stage and maybe and see how that goes. But that's tough, because it's 100 I think it's 149 to to turn into a funded account once you pass the eval. So once I get to 53,000 in this account, all of a sudden you start with a funded account for 149, and I think you start at 0, and you can go 2,000 negative or something weird, and then you have to make a certain amount. I'll probably want to make up to 10,000 or something first, and then take, like, say 5 out or something, and then it resets the amount so that you can only lose what you actually made, the 5,000 that you have left in there. So that would be ideal, but it's tough, and I can kind of see how it's tempting to want to use really high leverage to get there quickly, because you do get impatient, and the fact that you get a free rebuy, a free reset of the combine account once you get to 25 here. I mean, I don't know. Once I get to the 25, should I start trading, 1 contract, 2 contracts, like full size mini contracts every day? I mean, I don't know. Like, just lever up and see if you blow it up and then start over. I kind of feel like I'm going through this to go through it, but it's going really slow, and maybe, I don't know, maybe once you get that free reset, you just, you push it really fast and see if you can get it through the door and move on to the next stage. And you can't really do that with the funded account, because you're going to lose a lot more. So I don't know how to approach the leverage issue on that. And I think over time, with confidence and whatnot, I think one of the things too that is important is that setups are not all the same. And there are days, especially once I get to the funded account, like when you look at Thursday, and we go back and we look at that again. If I get another day like this and I'm on the funded account, I'm just going to lever all the way up because it's kind of dumb not to. The odds of the day changing are minimal, and it's just going to go up, and it's just like anything you buy is going to work, which is it's kind of interesting that the market does that and that it's so obvious to obviously telegraphed. I'm really surprised. I would have thought that the internals might be mixed or something in the morning and then suddenly shift into being bullish, and then you're not sure, but that's not true at all. It's like the internals are just so clearly bullish that there's nothing else to do but buy. What I may do for leverages is use like 1 micro or 3 micros, keep the leverage small when I get to the funded account. But then when I see a day like Thursday, either to the up or the downside, hey, it's time to risk, risk $1,000 on one trade and make the whole account from it. I don't know. That may not be a terrible strategy, considering the actual amount of risk is limited and the upside is pretty big on something like that. I mean, like I said before, you could have easily made $1,500 if you were in a single contract here. Well, I could have been in up to, well, I don't know, on a funded account if I was just starting. I think the max is probably 2 contracts, but I could have made $3,000 in a day on a single trade, and it would have been a really high probability trade to make. And the rest of the time I could just tool around with micros, inching the account up. And that would have been enough. 3,000 is enough to actually take 1,000 out and recover all your costs for a whole year or more or whatever. So that's kind of a big deal. The fact that the market does that, I think that's important to recognize. Let me pull the thing up again and just make one more mention on the internals. I'm not going to get into what all of these mean and how to interpret them. They're real iffy. They're not that clear, but sometimes there are some signals that come from these. I think maybe the tick is the most useful one. The other one may be the advanced decline line and how it affects the volume line are pretty useful, but this one is beyond, by far, is the most useful. This is a Trade Brigade script, and I think it's like volume breadth or something. Shoot, let me see if I can look that up for you guys, because somebody's gonna watch this someday. Trade Brigade. Let's see, what did I order? Okay, this is called Breadth Ratios Thinkorswim, and it's sold. It's free. You have to buy it. You have to set up an account and buy it for $0. It's a Thinkorswim think script that you add to this chart. Trade Brigade has a whole video on how to use, how to do market internals, and they go over how to use the script to create this. This is super useful. Like I said, if you just waited for days when this was solid and the numbers were high, there'd be, you would just, you're printing money on those days. It's ridiculous. What I wanted to say is that on the downside, it's the same way. Although the downside numbers oftentimes, because the market tends to be buy side, and it tends to drop faster and harder than it does go up. The numbers on like a downside day would be probably even steeper. They might be 5 and 6 and all red or something. The ratio is -5 to 1, something like that, -4 to 1. Where's the up day? You can have probably up days all green, maybe 2 to 4 across the board, 2 to 1 ratio, 3 4 to 1 ratio, and it was all 3 to 4 on Thursday. So again, if you set this up and you just wait for days like that, those would be probably the days when it would be worth using a lot more leverage than just sticking to one direction, and probably not even scalping at all, just walking away and giving the market time to do what it wants to do. So, all right, that's it for today. We'll see how next week goes, and good luck, folks. Thanks.